So, is a job in crypto really the golden ticket it's cracked up to be? That's the huge career question we're going to break down today, and we're using some pretty fascinating data to do it. Let's figure out if a move into Web3 is a brilliant next step or a bet you might regret.
And this is the fundamental question, isn't it? You see all the headlines, you hear about these incredible salaries, but then you also hear about the insane volatility. So, is making a jump into Web3, this new decentralized internet, a genius career move, or is it just a massive gamble? Well, right off the bat, the data gives us an answer, but it's not a simple yes or no. The answer is yes, the opportunity is absolutely real, but. And it's those buts, those caveats, that are the most important part of this whole conversation. Understanding them is the key to making the right choice. So what's so different about the crypto job market now in 2025? Honestly, everything. There's been a massive shift. The industry is really starting to mature. It's moving away from just, speculation and hype, and it's starting to build the actual financial infrastructure of the future. All right, so let's start with the good stuff. What's the case for actually making the leap? Well, if you look at the data, it paints a picture of an industry that is absolutely starving for talent. The demand for people is just explosive. We're seeing a 60% year-over-year jump in job postings, and some sources have that number way higher, even up to 118%. I mean, that's just a staggering rate of growth for any industry, period. And all that demand? Well, it translates directly into serious compensation. An experienced developer can expect an average salary of almost $190,000. And if you're in a really specialized role like a senior smart contract auditor, the person who has to find the flaws in financial code, those salaries can soar past $300,000 a year. The money is a huge, huge draw. But here's the thing that's really fundamentally different now. Look at who's doing the hiring. This isn't just a bunch of startups in a garage anymore. We are talking about the absolute titans of traditional finance. BlackRock, JP Morgan, Fidelity, Visa. They are all aggressively building out their blockchain teams. And this isn't some little experiment for them either. Just to give you a sense of the scale we're talking about, JP Morgan's own blockchain network now processes over $2 billion in transactions every single day. This tech has moved from being a cool idea to being a core part of how they operate. So what this all boils down to is a crazy supply and demand problem. For every one single qualified smart contract developer out there, that's someone who can write these self-executing contracts on a blockchain, there are about 17 open jobs waiting for them. If you have those skills, the leverage you have in your career is just incredible. Okay, but that incredible upside is only half the story. To make a smart decision, you have to look at all that potential reward and weigh it against some pretty significant risks. Let's get real for a minute. For example, the top-end salaries are huge, but the average salary across the entire industry has actually dropped by 18% in the last year. This shows you how market volatility can directly hit your paycheck, especially if a big chunk of your pay is in company tokens. And that leads us to this, the central contradiction of the market. How can there possibly be a huge talent shortage and major layoffs at the exact same time? It's because even with sky-high demand for specific skills, a market downturn can force even the biggest, most established companies to make cuts. Job security is definitely not a guarantee. So these are really the big hurdles you have to think about. The stability of the company you work for is tied directly to the crypto market. The rules and regulations are still a giant gray area, and it's really tough to break in if you're new. Only about 10% of these jobs are actually entry-level. So with all of that on the table, the good and the bad, what does this actually mean for you? Let's break down the kind of person who's most likely to really succeed in this environment right now. This chart really lays it out. On one side, you have the ideal candidates, developers who already have a few years of experience, finance or legal professionals moving into compliance, and frankly, anyone who can handle a lot of risk. But on the other side, if you're a total beginner or if you need 100% stability in your job, this is a path you want to be very, very cautious about. And if you're someone who does want to become one of these qualified developers, it is so important to be realistic. This isn't something you learn in a 3-month boot camp. It's a serious commitment. We're talking 6 to 12 months of dedicated learning, building on top of an existing tech foundation to get skills that are actually production grade, meaning they're good enough to be used in live, commercial products. Okay, finally, let's just zoom all the way out. Because there is one single massive trend that really defines this entire conversation. It's the big picture shift that explains everything we've just talked about. The industry has fundamentally grown up. It has evolved. We've moved from a market that was driven by meme coins and hype to an industry that is now focused on building the essential, invisible plumbing for the entire future of finance. The jobs today are less about hype and more about engineering bulletproof systems for the biggest institutions in the world. So, what's the bottom line here? The opportunity is genuine. It's not fake. The salaries are real, the big institutions are here to stay, and the demand for top talent is undeniable. But the risks, the volatility, the instability, those are just as real. So, is a crypto job worth it in 2025? Our research says yes, but only if you go in with your eyes wide open.